Throw your bullish divergences in the trash, along with the vast majority of your indicators giving you bullish signals. In this video, we're going to take a look at the 4 basic and simple things that you need to keep an eye on in order to stay on your toes in crypto. Are you ready? You better be. In my last or penultimate video, I can't remember which one, I took a week off. Sorry, YouTube, if you missed me. I mentioned that because there was a red-purple cross, which this is the 2-day chart, the red cross below the purple, and 100% of all cases that this has ever happened throughout Bitcoin's history, Bitcoin hits the orange line, which is the 2-day 200. And when it hits the orange line, it wicks past. So therefore, my last video when price is way up here, and most people were talking about bullish divergences, this and that, I mentioned, no, it's probably going to hit this line. And when it does, it wicks past. My target was $41,800. And where's price now? $41,400. And I took a week off. So that wasn't a bad play. And so whenever you see something with a 100% hit rate, as long as it's not only happened once or twice or 3 or 4 times, it's happened about 6 to 8 times. So you had a really, really strong chance that it was going to happen. And I hope that most of my viewers, maybe not listen and took my word for it, because I don't recommend you necessarily take my word for things, but rather that if you were bullish and listening to other folks or making your own analysis that was bullish, at least you considered it a strong possibility, right? As the least or close to as strong as whatever you thought was the best possibility. Okay, so hopefully that's how you're interpreting my analysis. You should always take it with a grain of salt and use it to supplement or complement your own analysis, all right? So that obviously played out. Now, so that is one of the 4 things that you need to keep your eye out on throughout this time, because usually when price comes down there and it goes below the orange line, it doesn't typically just keep going below on its first pass. It will come back up and bounce around it, all right? So what I'm going to do here is I'm going to go to another chart that has more lines and stuff on it, and these are the other things that I want you to keep an eye out on. But as you can see, we have 3 of the 4 items that I'm going to cover in this video, and this orange line is right around the other one. The other 2, at least 2 of the other 4, right? And also, the 4th one that's not on this chart is about here. So everything is coming to this point. I really, really think that with this orange target here being hit, typically price comes back up and goes something like this, okay? So if you want to go back in time, just take a look. The orange line was hit, price bounced around, right? Okay, let's keep going back just so you can see, get an idea of how it behaves. Coronavirus, yes, it did tank through, but it was the second time. It wasn't the first pass. This was pass number 2 in a relatively short period. So here, came down, came back up and touched it. So did it bounce around on top of it? Let's zoom into this around December 2019. No, but at least came up and wicked up to it. Do you see this? Let's take a look. So first pass down, you typically come back and at least hit it, right? And a lot of times the exact first time it touches it, maybe not goes below it, you usually get a bounce, right? Or often get a bounce. So there's usually some bouncy stuff that happens around this point. Let's take a look, 2018. See, it comes below, closes below, bounces around here. So typically that's the way it works. The second pass, for example, here, this is the second pass. First pass, second pass, yeah, you can go straight below. All right, now there is a question with this orange line. Well, is this technically the second pass? Because back here with Wyckoff, this was the first. Maybe. I just feel that was a little bit far back in time to call this the first pass, this the second pass, but it is a possibility. So if I, in this analysis, let you know that I feel that price should snap back up to certain levels, you need to keep this in mind, what I'm showing you right now. Because this could be considered second pass, and it really could get slaughtered, folks. Bitcoin could really get slaughtered, okay? All right, so let's dive back into this. That is the first thing you need to be taking a look at. Typically, price will snap back up to it, maybe not bounce around on top of this line. It might only go up to it, right? Okay, so that's the first thing we're taking a look at, with the caution that this might be second pass, and it could keep tanking. So you really need to keep your eye out on that. All right. The second thing to be looking out for is this red line, which is the monthly 10 EMA. I will go to the monthly chart. I will take off all EMAs but the 10. And I have this drawn in for a reason. See here, you can see that I just drew over it. You see that? All right, so let me put price back on. Now I'm going to go to something like the 2-hour chart. So you can see that price use this as essentially its point of support. See how much respect this red line got in general terms? Now, before this month tanked, this line was straight. So price was bouncing directly on it. But because this month of January's tanked down, it has curved down, but it was the point of support. So I imagine that price could have a good chance of coming back up to test that and maybe use it as resistance. All right, so now we're going to jump into the second or the third and fourth things that I want to show you for this video, but make sure you flip your phones vertically or get flipped off. Now that your phone's vertically, hit the like button for me. It's going to help me continue making videos for you. If you leave me a random comment down below, or you're going to stub your toe, or you're going to step on dang Lego, leave me a comment to help out the algo. Make sure that bell's set because this is time-sensitive information. Allow me to deliver it to you. We're in this together. Smash the bell. Okay, now let's go check out the third and fourth things that you need to keep your eye on and why price might bounce right up to it. Follow me on Twitter at @𝘾𝙤𝙣𝙣𝙚2, 𝘾𝙤𝙣𝙣𝙚2, and watch out for my clone scammer 𝘾𝙤𝙣𝙣𝙣3. Turn on your microphone and camera and ask me questions directly and live. Links to the Discord community in the description section. Not a fan of online communities, but you want exclusive content beyond YouTube? Hit the join button below this video to explore your options. Here's the third of fourth things. This blue line here, back from late September and early October, this was the level which created your first higher low on a weekly time frame. And because this has been broken, so this week right here, let me actually clean up this chart. This week right here closed below that blue line created back from here. So that is very bad. Now you do not have a weekly uptrend. You are in a weekly no trend. You have no weekly trend anymore. And historically, that is extremely bad for Bitcoin. However, before the bearishness from that plays out, oftentimes you will have some type of relief rally or a test back up to it. And guess where that aligns? With the first two things that we covered. It aligns with the monthly 10 EMA, and it aligns with the 2-day 200 EMA, the orange line that I had up earlier right there, now that I'm back on the 2-day chart. Now let's dive into the fourth thing. It's all right together, and they're all very significant, and it's getting kind of crazy right now. So I'm going back to the weekly chart. I'm going to throw on my blue 55 EMA, weekly 55 EMA. You can see that the end of Wyckoff, there was 1 week closed below. See that red candle right there? That week closed below. Monday and Tuesday went down farther than market makers, whales, the people who planned Wyckoff ran it the other way. The closure right here was key because it got people to take on shorts as those same market makers pushed price down Monday and Tuesday of the following week. And that made people convinced, hey, I'm going short, so market makers could go long because they can't go long unless other people are short. It's a one-for-one thing, right? If no one's selling apples, you can't buy apples. So they had to create a situation where people were interested in selling apples, right? So they baited. And then, but the bait was that red candle closing below the blue line, then ran it down even farther the first 2 days of the week, screamed it up so they could take on more and more long positions as more and more people thought it was a great idea to sell apples, right? Even though it wasn't. All right. So this could be essentially the same type of whale game setup, right? With the blue line, one closure below. What is today, Monday? What did price do? Aggressively went down at the beginning of the day. But it could be a mega one of these, potentially, because it's also a fake out below the weekly point where it becomes a downtrend. So this could get people to even more aggressively take on shorts. Do you see what I'm saying? So if those whales made a lot of money the last time they did this, this situation has way more things that people are looking at, which will convince them to finally be shorter so that those folks potentially, if this is a whale game, it might not be. Price might keep going down. I already showed you why at the beginning of the video. However, if this is the setup from market makers, it's if. I'm not telling you that it is. I'm saying these are the possibilities. These are the two things you need to know, essentially, right? And if you're making the guess with me that you think about at least a bounce, maybe not a recovery. So my main idea is that a bounce will happen, and here's why, as one possibility. And within that one possibility, I'm giving you 4 things to look at, right? Okay. So if I am correct with my main idea that whales are having a heyday or a potential heyday with this setup, it broke the weekly trend, people get short. It's below the weekly 5, people get short. It's below the monthly 10, people get short. Those are 3 things, not just the one before, back from the end of Wyckoff, where things were taken down and then run the other way very aggressively. So this could be a scenario where this is the setup to a very aggressive bounce that could lead Bitcoin up to 58K. Is this what I think is probable, as in 50% or more to happen? No, I don't think so. But if a run does happen or a bounce does happen, it might only go to 44K and then go lower. I don't know the significance of the bounce or the size of it. But what I'm saying is this setup could make market makers a ton of money, and it looks the exact same as it did before. So I want you to be aware that this is a strong candidate for what's about to happen in the environment where no one knows what the hell is going to happen. You simply need to know what are the most likely scenarios, which is why on Twitter and people, making comments of, you switch your mind every week. And I'm like, yeah, you should too, dork, because the three most probable scenarios are changing by the week typically, unless you're just ripping to the upside, right? Okay, so my main idea today is we might expect a bounce here soon, and here are the reasons why, and here's roughly where it might kind of peter out. So let's go back in, and a lot of this stuff is kind of aligning with the 44K area. So if there is a bounce, and you play this bounce to the upside, right, whether you're buying alts for a small gain of 15, 20% or whatever you're looking for, if they bounce with Bitcoin, then you might want to start kind of wiggling them out, once Bitcoin gets around 44K. That is kind of my assessment. Maybe not fully dish out, but I mean, personally, I would look for a re-entry after that point. But if we get a bounce, it might only go to here. And then if you just ignore all this stuff and go to a clean chart and just look at the 2-day 200 EMA, what might happen is just a bunch of freaking boring for a while. It literally might just dance on this line, do absolutely freaking nothing. And that could lead for all of January. It could either be boring with a small rally up to 44, then it just dances, which is what I think is my main idea. Or once it gets up there and it dances for just, a few candles, maybe 6 days or a week, the rest of this week, then maybe a strong rally up to the high 50s for a macro lower high somewhere up here like that. That is possible, but I will play with that idea once it looks like it's more probable. But right now, it does not look like that's one of the top 3 most probable scenarios. But what does look most probable right now is that we get a bounce. It goes just above this line for all the other reasons stated. It dances around at least for the rest of this week, and then we will reconfigure our top 2 or 3 probabilities from that point. Click this video if you want to see my analysis on why I really thought $41,800 was going to be hit, why most people were still a little bullish. Click this video if you want to see how bad the carnage could get and how alts might bleed out for months and months at a time in 2022. If you're new to my channel, click the circle here in the middle, and y'all just got typified worldwide. Peace.